Can stocks go up forever? When you look at a historical graph of the stock market, it looks crazy. The market has been going up and up and up for more than 100 years. It seems too good to be true. So is it a scam, or is there a different explanation? Hi, I'm Tom Crosshill, and today I'm going to tell you why stocks can indeed go up forever. To the moon! I can just hear you guys now.
What are you talking about, Tom? Stocks are way down right now.
And sure, you're right. In the short term, stocks are risky. I started my career on Wall Street during the financial crisis when the market dropped 50% from its peak. But long term, not only can the market go up forever, it's actually likely to do so. What's more, in this video I'm going to show you that stock investing could still be really profitable even in the unlikely scenario if stocks stopped going up one day. It sounds crazy, but it's really true. So let's ask 3 questions to see why. 1. What is the best known economic engine behind rising stock prices? 2. How can stocks go up even if this engine fails? And 3. Is there any point to stock investing if stocks don't go up? So here's question number 1. What is the best known economic engine behind rising stock prices? Okay, there are actually several reasons why stock prices tend to go up over time, but most people think of just one. When you buy stocks, you buy companies. So stock investing is essentially investing in the economy, right? So here's what people expect. If the economy grows, the stock market goes up. If the economy shrinks, the market goes down. If the economy stays flat, the market stays flat. That makes sense, right? It's simple and easy to understand. I mean, it's wrong, but it's simple, so that's nice. Well, look, there is some truth to this picture. If the economy grows a lot, over time, the stock market will probably go up. If the economy gets much smaller, the market will probably fall. Economic growth is an important engine for stock prices, but it's not the only one. In fact, stocks can go up for years even if the economy doesn't grow. And I'm not talking about market bubbles where you see irrational price increases. I'm talking about rising stock prices that are economically justified. Now, you're probably saying, that's crazy talk. Maybe you think I'm like one of those crackpots who think they've invented a perpetual motion machine. How can you get price growth when there is no economic growth? If you don't understand this, the stock market will naturally scare you. Global economic growth is expected to slow down in the future. Population growth is slowing. Global resources are limited. Climate change is already causing problems. Sure, it's hard to predict the impact of advancing technologies in fields like AI or biotech, but growth is likely to slow down. But that doesn't mean the stock market will stop going up. Here we get to the second part of our video. How can stocks go up when there is no economic growth? Let's imagine for the moment that the global economy is frozen in time. Every company globally stops expanding and instead keeps working at the current level of output. What happens to the stock market? Here's one key question. Is there still inflation? If there's inflation in the global economy, that means prices are rising. Who charges rising prices? It's companies. So on average, company income goes up. Of course, company expenses also go up, and mathematically, in the economy as a whole, if there is no growth, then company profits will simply go up with inflation. And if company profits go up with inflation, stock prices should also go up with inflation over the long term. Do you see how that works? In fact, stock prices can keep going up forever as long as there is inflation in the economy. Okay? They can go all the way to the moon, even if there is no real economic growth. They just keep up with rising prices. Now you could say, well, Tom, that's just a dirty trick. You said stocks can keep going up, but now you're just saying it's inflation. So what's the point? Why invest in stocks if the price goes up, but inflation eats up all the benefit? Remember though, if your alternative is just keeping your money in cash, then investing in stocks to cover inflation is attractive, right? And actually, it's much better than that. To understand why, let's get to our third question. Is there any point to investing if stocks don't go up? Before I answer that question though, let me remind you to hit that like, subscribe, and notification bell. Don't miss any of the cool investing videos we post every week. Now back to our topic. Imagine this world where the economy is frozen in time, and also there's no inflation and stock prices are flat. Basically, picture the whole world as one of those big model railroads, which just keep going round and round and round year after year with no changes. If you own shares in the stock market in this world, what's the point? Stock prices are not going up, so are you making any money? Well, of course you are. You can't forget dividends. When companies make money, they typically pay out part of their profits to shareholders. And here's the key: there doesn't need to be economic growth for companies to pay dividends. If the economy stays flat, that just means profits are not rising. But profits are not falling either, they just stay flat. And if you have profit, you can pay out dividends. Think about it a different way. There's a certain amount of income being made in the global economy as a whole, a certain amount of income in the whole world. Statistically, only about half of this global income goes to workers in the form of salaries and bonuses. So what happens with the rest? The rest goes to the owners of land and capital, to the investors, to the stockholders. So even in our fantasy world, stock investors have it pretty good because you're still earning a big part of the global income, even if that income is stuck in time and not growing. Do you see how that works? Do you see how stock investing could be attractive even if stock prices never go up at all? Okay, so let's come back to the real world now. In the real world, 1. Economic growth is still happening and will probably keep happening for a long time. 2. Inflation is a significant factor driving stock prices up. And 3. Companies are profitable and pay dividends. So do you see now where those long-term stock graphs come from? Do you understand how it's possible for stocks to go up and up and up for decades and even centuries? It's not a scam. It's not perpetual motion or crazy talk. First, you're covering inflation. Second, there's economic growth. And third, stock investors make money from dividends. As a technical note, by the way, this is why you should always look at so-called total return graphs of the stock market. These graphs include not just stock prices, but also the impact of dividends. Now, in the short term, stock investing is risky, and stocks go down as well as up. But over the long term, unless the global economy totally collapses, yes, stock prices can go up pretty much forever, all the way to the moon or even Mars. If you enjoyed this video, make sure to click like, subscribe, and the notification bell. I post cool new videos about investing and personal finance and growing your wealth and related topics every week. Oh, and tell me in the comments, do you believe stocks can go up forever? Or am I just an evil capitalist trying to fool you? Tell me, I want to know.